Welcome to our webinar, Health Savings Accounts. My name is Amy Crow, and I'm the Financial Education Specialist at Summit Credit Union, a not-for-profit financial institution in the Madison and Milwaukee areas. At Summit, we have a passion for helping people reach their financial goals through coaching and financial education. Today, I'm excited to share with you a bit about health savings accounts to help you decide if this product is right for you. Why are we offering health savings accounts? Because our members have asked us to. And in the time of rising healthcare costs, health savings accounts can be a valuable tool to help you manage and cover your healthcare expenses. So what is an HSA, and how can you use it to your advantage to pay for your healthcare and medical costs during your lifetime? This session will give you some basic information about the account, how you can benefit from it, and how you can use it. Here is what you're going to learn today. What is a health savings account? How you can benefit from using it. Am I eligible for this account? How do I put money into the account? How do I access the money? And what resources do I have available? So let's get started. A health savings account is like an IRA savings account that you can use to pay for medical expenses. Some people actually call it the medical IRA. It's a pre-tax savings option, and it can earn interest or be invested depending on the options provided by the financial institution that holds your account. Typically, a health savings account is offered when an employer has a high deductible health plan. High deductible healthcare plans offer lower premiums and higher deductibles and are intended to cover serious injury or illness once your deductible has been met. The idea is that consumers pay for more of their healthcare costs themselves before insurance starts covering costs. In order to help you pay for more of your healthcare costs before that insurance starts kicking in, your HSA will be used to cover small and routine medical expenses until that deductible is met. The account makes it easy to save money tax-free for medical and healthcare costs. Your employer will let you know if you are enrolled in an HSA-compatible, high-deductible health plan. Health savings accounts reduce the cost that you may pay out of pocket for qualified healthcare expenses and insurance premiums because they offer tax benefits, and you put money aside to pay for these expenses ahead of time. When you put money into your HSA, it's called a contribution. These contributions are tax deductible. That means that you can take a deduction on your taxes for your contributions into your HSA. You earn money on the account because you are paid interest on it. This is called earnings. Your earnings are tax deferred. And when you take money out, this is called a distribution. Distributions are also tax-free. This means you do not pay taxes when you take the money out if it's used for a qualified medical expense. There are two ways that you can benefit from opening and using a health savings account. This account is a way that you can pay for qualified medical expenses with pre-tax dollars. I thought it would be helpful to break this down into two categories. You can be an HSA spender or an HSA saver. Both HSA spenders and savers set aside money in their HSAs for out-of-pocket medical expenses. These are expenses that your insurance does not cover that you are responsible for. An HSA spender uses their money often. It might be for prescriptions or routine doctor's appointments or for unexpected medical expenses. Without an HSA, someone might take money from a savings account or put the medical expense on their credit card or use a flexible spending account. An HSA saver is creating a pool of money to use in the future for an unexpected medical expense, or even planned ones like having a baby. In fact, an HSA also can be used when you are in retirement, after you are age 65. Be mindful, however, that if someone is on Medicare, they can no longer contribute to their HSA, but they can still use the remaining funds towards healthcare-related costs. There is another benefit to using an HSA. You can carry over the balance from year to year. You don't have to spend the money in the account each year like a flexible spending account. And anyone can contribute to your HSA. That means you can put money into it, and so can your employer, your spouse, or other family members. We'll talk a bit more about that later. The HSA is portable from job to job, and cash balances roll over each year. So how do I know if I'm eligible for an HSA account? You are eligible if your employer offers a high deductible healthcare plan and you enroll in it. I'm eligible. How do I open an account? You can visit a Summit Credit Union branch to get started. You can find a location on our website. Look for the word locate at the top of the page. And you can even schedule an appointment online by clicking on Meet and searching our appointment calendars for a time that works best for you. When you open your account, you will need your driver's license, social security number, and you'll need to deposit $5 into the savings account. We'll also be asking you to complete 3 important forms. They are the HSA application, the HSA eligibility form, the HSA authorized signer form, although this form is optional. And as an extra convenience, we can provide you a no-fee debit card right at the branch when you open your account. No need for it to arrive in the mail. Our HSA accounts are set up as family plans, and you're responsible for knowing the plan and contribution limits. Because this is a tax-advantaged savings account, contributions and deductions are reported through tax forms and documents. How does the account work? The account creates a pool of money to use when you need it. You're responsible for the use and administration of the HSA account and using your money for qualified medical expenses only. You can add money by contributing to the account at any time via payroll deposits or depositing cash or checks into the account. The federal government sets limits on how much can be put each year into your health savings account. For example, your employer may contribute to the account. Some employers contribute quarterly into this account. And anyone can make a contribution to your HSA. This includes you, your spouse, another family member, or even your employer. The IRS does limit you on how much can be put into your HSA each year. You need to determine how much, if any, your employer is putting into your account. If you want to contribute up to the limit, you need to subtract your company's contribution from the limit to get the amount that you and others can contribute each year. It's important to understand what the limit is for that year so you do not go over it when you add up all the contributions everyone is making into your account. So let's talk about how you can access your HSA money. The idea is that you're reimbursing yourself for medical expenses from the government-approved list that you, your spouse, or dependents have. You will be able to see your HSA account balance in online banking. However, you will not be able to transfer it to your checking account. You will need to use the HSA debit card that Summit gives you to make purchases. You can also take out cash in the branch. Your credit union or bank might place restrictions on the minimum and frequency that you can take out, so please check on this. The IRS does allow you to have an authorized signer on the account. This means that you can have 2 debit cards to pay for things that you need, like prescriptions, one for you and one for someone else. How do I access my money to pay for medical bills and expenses? Say that you need to go to urgent care, your doctor, or the hospital. You've been contributing money to your HSA and have a pool of money to pay the bill from. A few weeks later, you get the bill. So how do you pay it from your HSA? There's a couple of ways. You can enter your HSA debit card information on the bill and send it back. You can pay with a rewards credit card, then take the cash out of your HSA at the branch to reimburse yourself and pay your credit card bill. Just be sure to keep a copy of your bill. You can even do this if you went to the doctor at the end of one year, but did not get the bill until the next year. As long as the HSA was open before the services, you can use your HSA money to pay for it. Here's an example from one of our members. Whenever I go to the doctor, I never have to pay any money at the time of the visit. The doctor will provide the bill to my insurance company, where they negotiate the cost, and then I will receive a bill in the mail about a month later for the amount that I owe the clinic. I then call and set up a payment plan with the clinic because my employer gives me approximately $50 every month into my HSA. I wait until that money has been deposited and then I make a payment to the clinic. I never end up having any money come out of my own pocket to pay for my medical expenses. You may have some questions about your specific situation and how a health savings account can work for you. Remember, there are several experts available to answer your questions. Contact your Human Resources Department regarding your eligibility, as well as how much they may contribute to an employee's health savings account. Your health insurance company is a resource. Summit Credit Union is a resource for your account. And a tax advisor is a resource regarding any questions on tax benefits, penalties, and filings. Let's talk about a few commonly asked questions regarding a health savings account. We often hear of members accidentally using their HSA debit card to purchase something that was not a qualified medical expense. Contact your financial institution to discuss this issue. Another commonly asked question is, my employer contributes to an HSA at another financial institution. Am I able to move that money to an HSA at Summit? Your employer may contribute to an HSA that is at another financial institution. You can move the money in that HSA to an HSA at Summit for better convenience and access, and we can help you with that transfer. Another commonly asked question is, will you receive documentation from Summit at tax time? Yes, Summit will send out a form detailing any withdrawals from your HSA by January 1st. Each year, we will also send a form detailing your contributions by May 31st. These tax forms will also be available for you in online banking. Another commonly asked question is, what happens if I change jobs? Your HSA will still have money in it, and you can still use it. However, unless you're enrolled in a high-deductible healthcare plan, you are not able to contribute to your HSA. If you have been contributing to your HSA through payroll deduction, a change would obviously stop that contribution. But if your spouse or another family member had been adding money to the account, they would need to stop contributing to the account as well. If your new employer has a high-deductible health plan and you enroll in it, you can start contributing again to your health savings account. Health savings accounts offer you many of the benefits we've talked about already, but there are a couple of ways that you can use your HSA to your advantage that we'd like to share with you. You can benefit by shopping around for your prescription medicine to find the lowest cost. Your high-deductible healthcare plan may offer a prescription drug benefit, or you may choose to have a separate prescription drug plan or rider. In either case, you will have to pay the prescription costs until you have reached your health plan's minimum annual deductible. This is a time for you to be a savvy consumer. Did you know that different retail outlets and pharmacies have different costs for different prescriptions? This is why many people on a high-deductible health plan shop around for where they are going to get their prescriptions. We recommend making a list of your prescriptions and call several pharmacies to check out the cost of each of them. Here's an example. You may have been paying a low amount, let's say $4 to $10 as a copay on your prescription medicines as part of a PPO healthcare plan. Then you change to a high-deductible health plan and your prescription copayment costs may increase, say maybe to $80. You could use your health savings account for your prescriptions, especially if your employer is contributing to your account, saving you money. You can benefit by understanding your health plan choices. There are many choices when it comes to selecting a healthcare plan, from a single plan to a family plan, each with different premium costs. One of our members who has a high-deductible healthcare plan at her employer elected a single plan for herself, but her husband and children are on his healthcare plan at his place of employment. They did their research on the healthcare plan options and realized that if she were on his plan, it would be an additional $250 a month for the premium. Her single high-deductible healthcare plan with an HSA costs her $40 a month, saving them $210 a month in premiums. And her husband's plan has a $1,000 deductible and copays. She, her husband, and really anyone can contribute money to her HSA, and she can use that money to cover those copays and deductibles for her husband and dependent children, even though they are not on her plan, as long as they are qualifying medical expenses. We hope that you have found this information in this session helpful. What we've talked about is what a health savings account is, how you can benefit from a health savings account, how to determine if you are eligible for this account, how to put money into the account, how to access the money, and we've shared with you who can be a resource for you. If you have any questions or would like to get some advice on your specific situation, please email me and I can connect you with someone at Summit who can help you take control of your finances. Thank you for spending some time with us today, and we hope you have a great rest of the day.